amount of capital, by my estimate, that's flowed into Bitcoin over a month, so just 30 days, is about 40 billion. You just have to be there for those 10 best days. And they're random. They happen all over the place. Sometimes they're at the start of the cycle. Sometimes they're at the end. They're all over the place. But if you miss those 10 best days, you lose everything. Why isn't the price higher? And I've written extensively. There's two answers to that question. Very interesting watching this divergence of opinion. I think it's amazing. This cycle's been fantastic. Bitcoin is just so much bigger. So the reason why you can go from 10K to 20K in a very short order is because that's like 5 buys from Michael Saylor today. But then we also have this connective tissue that connects all the exchanges, connects all the ETFs, all the custodians, and that is Bitcoin. My journey of making all the wrong decisions is full in 2018 and 19. And then from 2019 until now, it's full of all my decisions of just buying and holding.
Give us an overview of who you are and why you're actually excited about Bitcoin.
Yeah, so I bought the absolute Pico top in 2017. That was my claim to fame. And back then, Coinbase had an extra fee for Aussie dollars. So when I was doing my taxes, I looked at my first buy and it's above the top candle. Like you couldn't have bought higher than me if you tried. So that's how I first got in. Bitcoin was the very first asset I ever bought. At that time, so I used to be a civil engineer. And in particular, it's a strange field of civil engineering called geotechnics. So it's everything to do with the ground. Basements, tunnels, foundations, anything where you're digging a very large hole and trying to build a train station, a bridge, something like that. Now, what's really interesting about the geotechnical side is you don't get to put steel and concrete wherever you want. And we've got textbooks telling you how steel and concrete behave. You get what Mother Nature gives you. So there's a lot of risk, there's a lot of probability, and there's a lot of incomplete information. So, you've got a couple of boreholes, 50 mil diameter, and you've got to design an entire train station. So there's a lot of like problem solving and there's no precision. You really have to be ready to deal with uncertainty. And if you design it for clay and you get rock, or you design it for rock and you get clay, you can't do that. You need to have a design that's going to be flexible based on what might happen because you just don't know. And kind of sounds like markets, doesn't it? Like things are uncertain. We don't have a lot of information. It's a very complex puzzle. But if your thesis is too structured in the details, it doesn't matter because the future is going to change, right? At the moment, Trump can send out a tweet and any thesis you had can implode if it was based on like a very specific set of circumstances. So for Bitcoin, I fell down the Bitcoin rabbit hole after I lost a bunch of money in the bear market in 2018. Bitcoin clicks for all the reasons like sound money and, the debt crisis you could see coming and all this stuff. So it clicked for me. But really the thing that captivated me was markets. I found markets such a fascinating dynamic of like human beings making fear and greed based decisions. And what I realized that my personal framework, the only constant in markets is humans making decisions. So when you actually overlay that psychological element, suddenly it makes a whole lot of sense. Why does Bitcoin go up? Because people are greedy and they want to hang on to it and buy as many coins as they can. Why do bull markets stop? Because those same greedy people start taking profits and selling too much. While the narrative is there is no top. And I started just looking at all these different dynamics. So it's been a fascinating journey.
Awesome. I love that you started with buying the top. There's this meme of like buying the top forever. but now you're trying to not buy the top and buy when it's kind of a lower thing.
Well, I mean, I'm still buying, right? Even at 106. And that's probably one thing that's been quite interesting this cycle. If I go back to 2021, so obviously 2018 was my first cycle. I didn't see a bull market really. I mean, I saw a little one in 2019 where it went from 4K to 14. Not really a bull, but a bit of a like insight into what it looks like when it goes up because I'd only ever seen red candles up to that point. So that was like the first time I saw green candles. Like, hey, this is awesome. But each cycle, 2021, I started feeling like it was expensive at like 50K. So I didn't buy too much above 50K. But then when it went back to all-time high, I was like, oh, man, it must be wrong. So you restart your buying. And then, of course, we had the 2022 bear market. This cycle, I've actually found myself as a hodler. And I think if you've been in this market for long enough, a cycle or two, you develop like a Bitcoiner instinct. And I found that I no longer think it's expensive sooner. So for want of a better term, when we rallied to 73K, I was like, probably a bit overheated for now, just like gut feel. And then once we started pulling back to 50, 55, we got down to 49. I was like, value. So my behavior patterns shifted to, ooh, that's a discount, that's a discount, that's a discount. And even up here, once we went to 100K, I was like, yeah, it's expensive. Pull back to 90, pull back to 85. Now I'm back in. So definitely feeling this like acclimatization effect much sooner. And even now, right, we're chopping around 105, 106K. If it pulls back to 95, I think that's value. So like I'm acclimatizing to these higher levels much sooner than I did in previous cycles.
And you're also connecting those gut feelings and those things that you're seeing with actual on-chain data, right? You're connecting both kind of where are we? Are people buying? Are people selling? What's the unrealized, I think, loss and profit? I think that's what we are kind of looking at last time. And just for a small I think last time we actually just went really deep into what's on-chain analysis and what can we do with that. So we have the full episode on like 1 hour. So I won't go again deep in the same topic, but just as an explanation for people, there you can go really deep, and maybe you can give us a short overview of why you're looking at on-chain data, because there's so many different things out there. There's like following the M2, there's this power law, there's like stock to flow, there's like that Saylor model, like 21 years, 21 million. It's really fun how everyone kind of comes up with their own kind of structural model.
Totally. So a quick summary of, I mean, we're very fortunate in Bitcoin in that we have so much data. We have so much data and it's all transparent. And I usually bucket these, and it's funny, it's like surveying different groups of the Bitcoin economy. You can survey futures traders, you can see open interest, funding rates, volumes. You can look at options, you can see what the options market's pricing in. You can look at ETFs and spot and see where those markets are. But then we also have this connective tissue that connects all the exchanges, connects all the ETFs, all the custodians, and that is Bitcoin. Bitcoin, it's its own network. And really, what is Bitcoin? It's a big append-only spreadsheet. So this spreadsheet is full. This database is full of information about people buying coins, holding onto them for many years, and then selling at tops. It's also full of information of people like me in 2018 buying the top, panic selling the bottom, getting FOMO and buying again at the local high, and then panic selling the next bottom. And like my journey of making all the wrong decisions is full in 2018 and 19. And then from 2019 until now, it's full of all my decisions of just buying and holding. So I've got plenty of UTXOs where it's, some of them have been around for many years. Some of them have been around for a couple of months. Some of them are bought high. Some of them are bought low. All of those UTXOs contain my decisions. And every single Bitcoiner that's out there, all of your coins carry that packet of information of when you bought them, when you sold them, if you're holding them still, where how long have you held it for, all of these dynamics. And then you paint a big picture of how much of the supply hasn't moved in 12 months, how much of the supply, which has been held for 5 years, is currently selling. And these are some of those dynamics, right? So it's a really fascinating field where we can just see all these different subsets of the market. And more often than not, like 99% of the time, they speak the same language. When people are taking lots and lots of profit on the on-chain space, people in futures markets are usually going levered long at the top. So you're like, I've got a lot of sell side from the smart guys. I got a bunch of degenerates going levered long. Yeah, we're probably going to get to a local top soon. So you can start to like hone in. You're not trying to pick the exact predictions and all that stuff. I don't think predicting is worthwhile. But what I can see is every single time we've had this, and this all flagging, it's been overheated. So either this time is different or it's probably overheated, and vice versa to the downside. So it's really just a story about where Bitcoin and the market sentiment is.
And it's super interesting because for me, most people should just DCA and just dollar cost average, and they will be better off with than most people. But it's interesting to look at local tops and seeing kind of where we are at the cycle. If you have kind of a bigger purchase, a big expense coming up. I don't know if you see like, do I move in half a year or do I move in 1 year or 1.5 years and pay the moving costs and paying for new furniture and like having like, I don't know, a 20K expense all of a sudden, where usually my expenses are like 2-3K a month, and this is just 1 month where I probably need like 20K. So I might need to sell some of my savings or get some money otherwise. So I think it's interesting as a Bitcoiner because absolutely does make a difference if you hold on to Bitcoin for 1 year longer, because you can be 50% down or 50% up according to the year. So having some kind of feeling and putting that feeling into data with on-chain analysis and those models, there is some real world value there in even not being a trader, like even not being like selling out and then trying to like day trade or anything like that. I think outside of that, it's just like there is some real value just seeing where we are and making kind of decisions from that. Like, oh, if I have the decision of moving next month or in 1 year and 1 month, maybe I'd pick next year, or maybe I'd pick the end of the year. If you have that flexibility to choose where you put the expense in there, that's kind of the most value that I see in like seeing the cycles. Because other than that, I'm just buying Bitcoin. I'm 100%.
Well, look, there's another layer to it, and like I actually don't write for traders. I don't really care for traders, to be perfectly honest, because it's just not my interest. In many ways, like as a hodler. And if you spend any time on social media and you're trying to follow like what's going on, right? It's really Bitcoin is telling us the story of what it's doing. And I think that's the other way to think about it. I very much write for hodlers. We did a survey a little while back. We actually need to do another one. And we got like, what kind of person are you? Are you a hodler? Are you a trader? You're a finance professional? And our subscriber base is like 95% hodlers. And I'm a hodler, right? Really, what a lot of people are looking for is they see all these narratives of, we're going to moon tomorrow, or it's all over and it's dead. And really, the data tells you a story of like, okay, here's all the narrative. Here's what's actually going on. So, a big theme this cycle has been, why isn't the price higher? Why is Saylor buying so much and the ETF's buying so much and blah, blah, blah? And why isn't the price higher? And I've written extensively just helping Bitcoiners go, the price, there's two answers to that question. One, the price is higher. We're at $106,000 and we've been here for like a month and a half. The price is higher. And if we compare that to the amount of sell side pressure that's been going on, as you mentioned, there's a lot of OGs where 100,000 was their like stretch target. It's like, I was buying Bitcoin at $100. I wasn't. I wish I was. Other guys are saying, I bought it at $100. We're at 100,000. I can change my life, like in a really, really meaningful, big way. And there's just a lot of sell side. So really what if I'm trying to frame up for my audience, it's about understanding that we're actually just a really, really big asset now. And the amount of money that has to come in to move us, to go from 100K to 150 in price, 50% move. Most hodlers have seen 50% moves all the time. They happen up and down. But that's $1 trillion market cap move. So in order to get that $1 trillion market cap move, we probably need several $100 billion in net capital to flow in. So it's very much about just helping people reason about, understand, take all the narrative that floats around on Twitter and just give it like a really data-driven basis. And the way I think about it, I don't want any of my subscribers to ever feel like a deer in the headlights. If the price shoots up 50%, I don't want anyone to be surprised. They should be like, oh, okay, cool, that makes sense. And here's what probably caused that to happen. And if we sell off by 30%, 40%, I don't want people to be like, whoa, I didn't see that coming. If it does sell off, it's like, oh, okay, no, it made sense. There was a lot of sell side. We didn't quite have the demand coming in. I'm not going to sell it. I'm not going to change my behavior. I'm going to keep DCAing away, but at least I understand why the market did what it did. And I had thought through those problems ahead of time. That's very much how I try to write, to just help people reason about what is a very, very complex beast. And we're fortunate to have a stack of information and data to put it all together.
And I think there's this feeling, and I just had Nico from Simply Bitcoin 2 episodes on, and it was fun because he said, oh, this cycle sucks.
This cycle's amazing. I love this cycle. It's been great.
And I think it's kind of like looking at very short term, where I think the first time we hit the 100K was like early December, so about 7 months ago. So that's like, okay, if you look at the last 7 months and you just take the high there, and like the right now is like about, like we're about stable at the same level, and we have gone up and down in between. But if you look a little bit outside of that, just like last 1 year, we have gone up, I think I looked at before, 60-70% in the last 12 months, which is amazing. That's over the average CAGR.
And the sharpest drawdown is like 30%. It's like, guys, this is the most robust, serious, institutional sized. This cycle kicks ass, in my opinion. And this is exactly the kind of thing. And I love that there's two different perspectives on it. For me, this cycle has been incredible. And I was actually talking about this the other day. As a Bitcoiner who's been around for a number of cycles, a lot of these guys are saying, like, where's the volatility? Where's the thing that I'm used to where it rips to the upside and then sells off and like my emotions are all over the place? They miss that rush. My old man, I don't know if you use that elsewhere in the world, but old man is father. So here in Australia, there's some Aussie slang for you. My old man, I got him in 2020. So he rode the up, and then believe me, he rode the down in 2022, and I heard about it often. When is this number going to go back up, mate? Well, I kept hearing. Now, he's very, very happy because he doesn't think about it anymore. Bitcoin is no longer a part of his like day-to-day, why is my like portfolio down? He's just watching it slowly grind up, and he feels much more comfortable with it. And if you think about the types of people who are coming on board, we're accessing new pools of capital who they're not accustomed to 50% drawdowns. They might have a 50% drawdown in their assets like 3 or 4 times in their whole investing career, not 3 or 4 times in the last 3 years. So in a way, this cycle is very much a sign of maturation. The fact that we're still like, people can be upset about it, but we're kind of following all of the previous cycles, and we're 100 times bigger. We're 10 times bigger than the previous cycle. The fact that we're following it even remotely the same way, in my opinion, is unbelievable. That's the anomaly. I actually think we should be slower, and I'm surprised that we're moving as quickly as we are. So it's very interesting watching this divergence of opinion. I think it's amazing. This cycle's been fantastic, and it's making so many more people who were not comfortable with Bitcoin comfortable to start bringing serious capital on board.
So you're seeing kind of institutions and bigger money wallets making it less volatile, but also more stable and more safe for people to invest in.
Totally. And I mean, like if you look at the ETFs, there was a big thesis that the ETFs were just going to be, hedge funds jumping in and playing, Ponzi games and whatever, and just, in for a quick buck. And what we've actually seen is that exists. There are definitely hedge funds, but a lot of them are doing like cash and carry arbitrage. So really what they're doing is just adding liquidity and depth on both sides of the books. There is definitely that hedge fund element. But at the same time, when we get drawdowns, and I actually ran the numbers, so here's some stats for you. On a weekly basis, on outflow weeks, when the ETFs see net outflows, the average is about $160 million. So when they have a bad week, $160 million flows out. On the inflow week, it's $780 million, almost 5 times more. So the inflows are 5 times bigger than the outflows on a bad week. So this is not the kind of behavior that you see from people who are just in here for a quick buck. This looks like buy and hold capital, right? People who are allocating to Bitcoin, actually adding it to their portfolio and saying, I'm going to hang on to this. Now, the ETFs are just one sector. We're obviously seeing that in spot markets and various other forms, but very much this maturation phase. And I think, we don't have the kind of Ponzi games that we had in previous cycles. It is a lot more serious capital. There's a lot more allocation rather than traders. Traders are trying to find what else to move to because the crypto industry has just nuked everybody. So that's not giving them their trading rush. We're seeing a bit more of this activity in these treasury companies, and it's actually kind of moving into the equity market as well for Bitcoin equities. But Bitcoin itself, as it gets bigger and grows up, it's going to trade more and more like gold in that sense. And for me, I often talk because gold's my only other holding, really. And the reason that I hold gold is not because it's going to outperform Bitcoin. I know it's not. But it's the same trade. Both are sound money. Bitcoin, that's my longest duration asset. Gold is if I do need to tap capital. You mentioned before, if you have an expensive, suddenly you need 20 grand or something in that ballpark, that's gold for me. It's like my fiat that's not fiat. It's cash that's like there for the next 6 to 12 months. I'm pretty sure it's not going to be down 50%. Bitcoin could be down 30%. I don't want to sell it then. Gold, if it's down 10%, okay, that's fine. I don't mind. So, as we grow up, Bitcoin's going to move more and more into that. Like, I know the value is going to be there. I'm not going to be too worried about where it's going to be in the cycle because it's doing that preservation of capital. So, yeah, no, I think it's fascinating.
I think a lot of people expected with the 100K something similar, and I was one of them actually, something similar than we saw 2017. And I actually looked it up before. In 2017, we hit on the 2nd of December, the first time, the 10K. And 14 days later, we were at like 18K. So it was just taking a very short amount of time to really rush through the 10K. And now we are 7 months around the 100K, like we went down to 70K, something like that. And I think the top was 112, I don't know, 110, something like that, which is amazing. But we hadn't had this rush through like, oh, we are almost at 200K. I think a lot of people kind of expected that. And I was also shocked how little the retail plebs kind of cared for Bitcoin, like those who were not into Bitcoin. When I went into family gatherings and parties and stuff like that, people were like, oh, it's 100K, oh, interesting. Like they really didn't care. In 2017, it felt different. It was my first, like 2017, I wasn't in Bitcoin. I didn't buy anything at all, but still in the school, it came up, oh, Bitcoin. So I heard it even though not being a Bitcoiner. And now I feel like if you're not in Bitcoin, you're not even really hearing about Bitcoin these days. It's kind of boring at 100K. Why do you think it's the 100K kind of different? And do you also see that the retail crowd is kind of not there as much as it was 2017 and previous cycles?
For sure. Oh, absolutely. And I think this is where people need to understand how big Bitcoin is relative to those previous cycles. So to give you a bit of a context, you're absolutely right that like that period from like December to like through December in 2017, it was, 10K to 20K. In the last 30 days, the amount of capital by my estimate that's flowed into Bitcoin over a month, so just 30 days, is about 40 billion. 40 billion is Bitcoin's market cap in May 2017, literally 6 months before it peaked. That's the whole market cap. So just the last 30 days of capital inflows into Bitcoin was everything up till May 2017. If we take the ETFs in total are about 130 billion in AUM. That's the market cap at the end of November. So now we're entering December, just that final wick that you were just talking about. If you take the ETFs and strategy and just add those together, now we are 3 days. The value in the ETFs and in MSTR right now is equivalent to like 2 days before the all-time high in 2017. So if you just take those numbers, 2017 is irrelevant. It's so small by comparison to where we are at the moment. And those ETFs have only been around for 18 months. And Saylor, whilst yes, his balance is like 592,000 Bitcoin. If you go back to, I think October or November 2024, it was like 180,000. So, he's added like 60% of his balance just since November. So really, at the end of the day, we can take the last 12 months of accumulation from both of those entities, and that's the whole 2017 market cap, not even capital, because we know that the market cap isn't how many dollars have been invested. There's a liquidity factor there. So I think that's just like a really important reference point to say that Bitcoin is just so much bigger. So the reason why you can go from 10K to 20K in a very short order is because that's like 5 buys from Michael Saylor today. That's like how much it would take to create that entire market cap move. Now, on the retail topic, you're right. I don't know about you. I've received 0 phone calls from muggles, like people who aren't into Bitcoin. 0 phone calls whatsoever. What I have found in the last, I would say 2 months, 3 months, really since we rallied off, maybe from April onwards, I started getting phone calls from existing Bitcoiners saying, what's the best way for me to borrow and lever up to buy more Bitcoin? That's been the phone call that I've been receiving. So take that for what it will. That tells me that there's a bit of leverage and margin starting to creep into the system. But I think that the average pleb just doesn't care, which then goes, okay, if we're not talking about retail here, because retail also struggles to move a $2 trillion market, what we're actually looking at is serious money, institutional capital, also retirement accounts. I think we shouldn't underestimate how many Bitcoiners, whether self-custody or via the ETFs, are actually allocating their retirement capital to it as well. I think that's a big factor. But we just have serious money, and Bitcoin's a serious size. You need serious capital to move it, up 50%. It'll happen, but it's just going to take longer than people expect.
It's kind of, we are now in a huge cruise ship and not in a jet ski anymore. And the cruise ship
100%.
just needs a lot of time to steer. And the jet ski, you're like just going left and right. And it's like, oh, like, wow, it's interesting.
And one more point to that. And George, who I think you might have interviewed recently, George the artist, that's one of his paintings behind me as well. He had a great line on one of my, he had a comment in one of my posts, and he goes, when he used to fly for the Navy, the big, what are they called? Aircraft carriers, when the captain yells stop, it takes 5 nautical miles for it to stop, right? So the order has been made, but it takes so long for these things to slow down. So you're right. Thinking about like a cruise ship or an aircraft carrier versus a speedboat is dead right. But also, once it's got momentum, which at the moment we have momentum to the upside, it takes a hell of a lot to slow it down. So yes, it's going to be slower to turn, and it's going to take more capital to get it moving. But once it's moving, people become like, they're happy to continue DCAing and allocating, because the trend is your friend, and the trend, in a very, very big picture sense, is moving up and to the right.
I love that comparison. And yeah, I had George is actually one of the few guests that have been on 3 times now. The third time isn't out yet. Maybe once this airs is already out there, because it was in person in Prague, so it might take a little bit longer to do it. So it either was just out a few days ago or will come out in a few days. And it was amazing. I just love, he's one of those people that has so interesting stories. And I have been 3 times with him on a podcast, and he just keeps getting more interesting. With some people, you just ran out of topics to talk about after like the first episode. And he's like, oh shit, like I probably have like 30 episodes to go with him. But that's just, I'm a huge George fan.
Yeah, me too. No, he, the painting that's behind me, which you may or may not be able to see, but one of my prized possessions that he did is really an incredible piece, and I love it.
Yeah, absolutely. Just like typing in his name, George Boudin, in Google, and you will see his gallery and his paintings. Really, really cool. But you said something interesting, because actually I was wondering about that. A lot of people are very interested in borrowing against the Bitcoin, which I personally think, with those rates and those durations, it's a very risky product out there. I personally don't do it at all. But what does it tell us in the market when there is big companies, with Strike, it's now doing that. There's Firefish. They had a huge booth in Prague. There's a lot of there's a lot of companies that do that, and it seems also being a topic that's just very interesting for Bitcoiners. Kind of, what does it tell us about the market? Is that like a sign that we are shortly or briefly before like a huge turn up and then like going down again, or is this just like a normal kind of progression because people have more Bitcoin and they want to live also?
It's both. So I would generally say that we're in the 4th innings of this bull. Now, the 4th innings is the most exciting phase of the bull. And things can get pretty explosive, no question. Like, we're looking at all these treasury companies popping up like mushrooms. People are going to start borrowing. This is all going to happen. I also just think that that's a reflection of, like, I mean, you and I have definitely thought about could I borrow against my Bitcoin? Maybe the rates and the products aren't quite where they're at now, because I'm in the same camp as you. I'm not quite ready to borrow with those kind of rates. And I want to see how the market settles down first. But am I confident that at some point in time I will borrow against my Bitcoin? Absolutely. Why? Because it's pristine collateral. It's literally the best collateral that you could possibly have. So when the market matures to the point where there are the right products for me, I'll definitely use those kind of things. So I think it's a sign of, like, people have Bitcoin as a huge part of their net wealth, right? People have been stacking away and buying away, and it is their net worth in many instances. I mean, many Bitcoiners, myself included, like 90%, 95%, like most people are all in this thing. So at some point, if you want to get liquidity, you either have to sell it or you have to find some kind of lending desk. So these things will evolve. I think it's going to be a very important part of market structure, especially now that there's movement in the US where I think it's SARB 121. Now that that's been overturned, banks can actually start custodying, and once they custody, they'll start lending, and all these products will get built up. So I definitely think it's going to be a big theme. It's going to be a massive industry moving forward. I think over time, rates will come down as competition starts to grow. All of these things are good in the immediate term. At the end of the day, look, just because you've got leverage is a part of any system. There's sensible and sustainable ways to take leverage. What I would say is that, particularly for like the retail investors, for me, for example, I know that I would never borrow enough that my Bitcoin stack would ever be at risk. And we all know that Bitcoin can go down a lot very quickly. So I think at the end of the day, I don't really think there's going to be too many people like borrowing like right up to their liquidation level. There'll be people who do that, but most people are actually their Bitcoin is so precious, and it represents so many hours of hard work and saving and hodling and cycles and like surviving horrible bear markets. I think most people are going to be very careful with their leverage. We'll see some people borrow and then, maybe they'll buy a house with that capital, but I don't think anyone's going to borrow up to the maximum extent, not at scale. So for now, look, it's definitely a sign of the times. I think we are later stage. I mean, even if we look at things like more immediate leverage, like open interest in futures and options, both of those are almost at all-time highs, really, really quite elevated. And relative to the Bitcoin market cap, if you take options and futures open interest, combine it together, it's currently about 5.6% of the Bitcoin market cap, which is nearly an all-time high. So relative to Bitcoin's size, there is actually quite a lot of leverage, but I don't think it's those lending desks. For now, it actually just looks like straight futures options, your classic leverage instruments, albeit it's a lot more mature than it was in previous cycles.
I want to pull something interesting up that Seyr talked about in his recent presentation in Prague, which I think was really interesting and good that he finally put something together, because I see a lot of people saying like, oh, I do the Seyr strategy, and they are doing it with consumer credit, short-term consumer credit. And as you can see, he kind of listed out like how long of the duration, because the terms of the loan and the terms of the credit is really, really important. Like how long is the duration of the credit and how high is the interest cost of the credit. And most people with consumer credit have like 10 to 20% and have it short term under 5 years. And Seyr outright just calls that gambling or a loan shark victim. And yep. I do agree with him. And he says like it's basically what the chart says, do it over 10 years and under 10% interest rate, and you're in a good spot. And this is kind of the message that I'm currently saying, like, just don't do it. Like, just have Bitcoin as money and like, don't do it. This is kind of like, if you really want to do it, try to hit the orange line here. That it comes from Seyr. So I think it's an important thing to say about, because I see a lot of people, I do the Seyr strategy and just like go have like 50K in debt with 15% interest rates, and I have to buy it back in like 18 months, something like that. Probably not a good idea. If that's the best credit you can get, you probably shouldn't get credit in the first place.
That's it. And look, it's one of those things where it's all very alluring, right? Because people, they want to buy as much Bitcoin as they can. And this is another reason why I write the way that I do. I know, and I've been through enough cycles to feel that FOMO of, I don't have enough Bitcoin. And you do anything you can to just like stack as much. And a very tempting way that people do that is they leverage up, because they can suddenly get all this Bitcoin, but they don't fully comprehend. They overweight the risk that Bitcoin is going to go up, and they'll never buy at that price again. They put way too much emphasis on that, and they don't think enough about what if it doesn't do that? What if it doesn't rip to the upside? And there's a few ways you can get blown up. You can either buy too much and then you get liquidated, then you actually end up just destroying yourself. Or there's the other one where it doesn't go up as fast as you expected, and because it hasn't gone up enough, you then go out there and people start speculating, and they say, oh, well, I'll take a little bit of that money and I'll speculate on this long tail out. I'll buy some strategy stock, or I'll buy some Meta Planet. And they just go further out in the risk curve looking for that quick win. And the problem is that quite often those things don't quite play out, because by the time you're doing this, and if you can be honest with yourself, if this is the first time that you've taken on a serious amount of debt to go and really to speculate or to buy in financial assets, if you actually look at it and you go, is this the first time I've done this? And if it is, I got asked a question the other day. It's like, when do you think is the best time to lever up? And my answer is probably when Bitcoin was $20,000 and it was in a bear market. That's the best time to lever up. But no one does it back then because it's scary, because the market's going down, right? And they don't see it as a bottom. Why am I getting all these phone calls at 110K to start levering up? Because now people have the confidence that the bull market's in play and I can't blow up now. The market's going up. So you get this like transition where people now believe so strongly that Bitcoin is bulletproof that the risk is going to start piling up. And I don't quite think the risk is high at the moment, but it is trending higher. So really, this is why I say we're later stage. Maybe not late stage, but we're definitely later in the game than a lot of people expect.
Yeah. I was just lucky because I wanted to, once in my life, I was like, I want to have a loan and just like see the experience of that. And it's like very low interest rate. It's like 8 years. And I literally did it at the best possible time when Bitcoin was at like 18K in 2022. But it was not at all strategy. It was just like, I'm a young guy. Back then I was like 23, 24 years old. And I was like, hey, I want to go through the process, how the fiat system actually works, and issue a loan for like, I don't know, 15 or 10K, like not a big amount. And it was so far extremely good. And even though I had a good experience, I'm like, I never do that again.
Yep.
Because it's just, I don't know, you have to make the payment monthly. And it's like, I don't want to, it's a weird feeling for me to have debt. Maybe I'm just not made for those financial engineering things that people do.
No, and honestly, like I'm much the same, right? So I have a margin account that I use. I actually use it to accumulate gold. And the main reason is because I've already deployed my money into Bitcoin, right? So my cash is always just going into Bitcoin, but also I have cash flow. So I know that I can service that loan. So what it means, I don't have to put my cash to buy gold, because again, I do like to have it a piece of gold as my kind of secondary asset. But if the market reaches a nice area and I just don't have the cash on hand, I can use that margin account, and I'm like you, I'll pay off that debt very, very quickly. I prefer to live in a more equity-based system where I don't like having that debt overhang. And I know that there's like a level of, some people will say that you're an idiot for not taking on too much, take on some debt and short the fiat currency and all this stuff. It's like, yeah, but I also like just not caring about having debt. I actually like being debt-free. Like for me as a person, that just like aligns with where I'm at. Yes, it means I'm not going to get the best returns. It's like, but I also don't need the best returns. Bitcoin already kicks ass on so many levels. In many ways, just find what works for you. Don't get pressured by all people saying, hey, you got to go out and buy this stock, or why don't you have any of this? Or, you're underperforming because you're not fully allocated to this. Like, just do what works for you, because nobody else is managing your finances except you. So do what works for you. Don't push yourself over the limit. You don't have to. All you have to do is not blow up and get to the other side. Have a thesis, have a portfolio, get some Bitcoin in it, and just survive, right? Don't do anything that's going to make you unable to sleep at night, because that's a horrible feeling. Because the truth is, it goes wrong a lot of the time. And when leverage goes wrong, the problem is it eats into what you've already earned. So if you've got to give up some of your collateral, it's always going to be at a bad price, which means you have to sell a lot more Bitcoin to cover that fiat loan if it goes wrong. So, just don't push yourself too hard. There's no reason to.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilant represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. If I look back, like if we see in 2015, the Bitcoiners that came into 2015 and are still around, the ones that are the richest and the wealthiest are the ones that never played with the Bitcoin, the ones that never put it on exchange. They always had it in self-custody. They never effed up their own self-custody. They never like bought altcoins that just went up and down and went to zero. Just DCAing, self-custody, pure Bitcoin. Those are the wealthiest people that went into Bitcoin 10 years ago. So why do you presume in 10 years it will be any different with some fancy leverage strategy or anything like that? Just like stick to the basics and you will be probably the wealthiest as you can possibly be with that strategy. So I don't know. I think people just want to really do something with their money. They just don't want to just let it sit. I think like just waiting and let it sit, it's actually very hard for the human mind.
That's what they say. So HODLing is simple, but it is not easy. And that is a very important distinction. It is a simple strategy and it seems too good to be true, but it just continues to play out. And as an example, right, you mentioned before, I spend all day looking at charts, data, where the market's at, where I think it might go, trying to give my opinion on things. We've also built codes in the back, coding systems where we're trying to look at, okay, if we implement strategies and if you buy exactly here and sell exactly there, I've played around with all this stuff. It is so hard to just beat daily DCA. It is so unbelievably hard. And this is something that I learned a long time ago. It's not even about if you're just on a daily DCA wagon, it is almost impossible to beat that strategy. And even with some of the most proficient algorithms, you might beat it by 5%. What I think is much, much better is to train your mind, because markets are actually about your own psychology. It's a simple strategy to daily DCA, but it is not easy because your brain is constantly looking for pieces of information to confirm something, to change your thesis. You always feel like you have to be mobile and moving. You don't. You just have to understand where the market's at, understand what is going on around you and why the market's moving the way it does. Because if you understand why, you're actually dealing with your own mental psyche. It's not about predicting markets. It's not about timing buys. It's about training yourself to understand why the market moves the way it does. So when things happen, you're not surprised, because so many people are surprised when stuff happens. But if you thought about it ahead of time, you've just reasoned about these things, it makes the whole journey so much easier. So it's trying to take that simple and get it just a little bit easier. And it's all about your own psychology.
One aspect that a lot of people don't talk about with the daily DCA, if you just do that, you don't have to spend the time to actually research those things. So you can go out and make some money. You can go out and provide value for community or be there with your family or whatever you want to do. And that's kind of where I'm like, okay, I could maybe outperform Bitcoin. But if I just have the DCA and don't have the financial engineering things, I just provide value and earn more money and try to level up in my own world. And I feel like that's the best strategy. And if you want to dive deeper, you have an amazing newsletter, you have amazing guidelines for that, and a lot of great educational materials. And that's kind of where I'm at. Yeah, like if you want to do it, yeah, you can kind of weight your DCAs and kind of see, okay, where's the market, and here I'm buying heavier, here I'm not being. But even just doing that is not you will not be like double as good. So like focusing your time and energy on just providing value for community, that's really the thing where I'm like, oh, that's probably your best, most profitable move that you can make. Totally. And also good for the world overall.
And I also find, like, because I've been in Bitcoin for a couple of cycles, so, I've been doing my DCA, and, I used to get, basically I would get paid, I'd pay off my like, I'd just live off my credit card, pay off my credit card, and then everything that was left over would go into Bitcoin. And you just live really frugally. I'm sure many, many Bitcoiners have been through that journey. Once you've been through a couple of cycles, right, you've got your own feel, you've got your own instinct for how the market moves. So now, I don't really like, as a business, we're daily DCAing, because, even me, I spend all day analyzing the market. And for the business, I just let it just daily DCA, because it's just like an easy, simple strategy. And I don't have to think, even though I literally analyze the market for a living, we always have that daily DCA. However, there are times when the market, for example, in 2024, I think when the yen carry trade blew up and it sold off to 49K, that was one of those environments where we go, okay, 49K, and we released a video saying, guys, this looks like, it's scary as hell, but this is what bull market dips look like. And it was really, really juicy, and we allocated a big lump sum. And we did the same when it sold off to 75 in, March this year. We were talking about this air gap that we talked about, basically between 75 and 85. On the way up in December and November, there was basically no coins transacting in that zone. And we were talking about it through January and February. The price is 100, 110. We're saying, guys, just be aware that 85 to 75K zone, it looks like the market might want to go there. I'm not predicting it's going to go there, but don't be scared if it happens. And of course, it did happen. It went exactly to 75K. And again, not because I was predicting. I was just saying this looks like an area where the market might want to test. And when it happened, we lump summed, because it's one of those things that we've thought about in advance. The daily DCA is going that whole way. We don't care about the price. It's just ticking away. But every so often you can go, now I can actually take some risk, and now I can put that money into the market. And, a lot of folks are saying like, oh, but if we get to 150K from 100, that's a 50% move. But if you go to 150K from 75K, that's a doubling. That's a 2X. That's literally twice the performance. So it just helps you take that extra amount of risk and like time things. But also there's a lot of people who, if you are going to be taking on leverage, understanding where the market is in the cycle, right? If you're seeing a big waterfall sell-off, is that one of those things where you panic and go, oh man, now I got to go and like clear my debts and, make a rash decision because it's like concerning? Or it's one of those things we go, I've already thought about that as being possible. I'm going to make sure my liquidation level is well and truly below. And like, you just manage risk that way by, thinking through scenarios ahead of time.
How do you actually look at buying treasury companies like Strategy, MetaPlanet, CyberScientific? It's interesting because last cycle we heard a lot about altcoins, and this cycle, maybe I'm too deep into Bitcoin only cycles. I don't hear a lot of altcoins actually.
No, you are not too deep. This is literally what's going on. There is no demand for the crypto cycle. It's quite remarkable.
But there's a lot of demand now for treasury companies. It's like almost I don't want to compare MetaPlanet to an altcoin, not at all. Definitely also not strategy. Like, they're in the Bitcoin ecosystem. They're also providing actual value outside of just buying Bitcoin. And some of the scientific, of course, like, they're doing great things. So they're very far away from any altcoin, and they're only in Bitcoin. But it's interesting how this cycle, the people that want to get more Bitcoin, and I hear that all the time, like, I want to outperform Bitcoin, they're doing it with exactly those treasury companies where in previous cycles they did it with altcoins. How do you look at that?
No, I think that's the right way to think about it. So I agree with your framing that they're not shitcoins, but the meta around them is this cycle's shitcoins. So some stats. If you go back to the 2019 That's what I used 2019 because that was really the period where Bitcoin dominance was rising in the crypto sense. So Bitcoin dominance was rising through the bear market. That's typically how it works. So bear market, early bull, Bitcoin dominance would rise, and then they would have, as you get late stage bull and everyone starts speculating, Bitcoin dominance would fall. So in the 2019 cycle, it was about 1.5 years of Bitcoin dominance increasing, and then it started to plateau in mid 2019 and then started decreasing from there on. We have been in a just non-stop, unrelenting Bitcoin dominance climbing up and to the right for 3.6 years. It has just been unstoppable. It just keeps going up. And we just hit a new cycle high recently. So the crypto ecosystem, the shitcoin world has just, so many people have been waiting for alt season and it just hasn't come. I've got a whole bunch of metrics and charts and things that I've built over time because I observe the crypto ecosystem because I thought this was going to take another cycle, honestly. I'm very surprised it's happening now. But, you can plot, I use gold as my benchmark. If an asset's not outcompeting gold, why am I even looking at it? Really, Bitcoin's the real benchmark, but, you've got to compare Bitcoin to something. So gold is my benchmark. Ethereum and Solana, which are really the two big altcoins, they have been destroyed versus gold, right? Versus gold. So if your shitcoin is not outperforming gold, what on earth are you holding it for? So I think that whole world is in a world of trouble because Alex Thorne, I think, has the best descriptor of this. For years and years and years, the altcoin space was like the dog chasing the postman. And then the dog finally caught the postman and didn't know what to do with it because it didn't actually have a product. There was no there. So I think now they're like, oh, shit, we actually have to build something that people want. And they're just a long way from home. Now, on the Treasury companies, this is absolutely where a lot of that speculative potential has moved. Now, I personally have spent a lot of time thinking about strategy because they're obviously the biggest one. It's a fascinating story. I've gone through periods where I'm hot, cold. Like, I like it, I hate it, I like it, I hate it. I'm long, and I actually quite like the business. I think it's a fascinating journey through financial engineering and just like how the finance system works. So my views have evolved on it quite significantly to the point where I'm now long for the long term. I think it's a very clever strategy. The idea of like issuing long-term debt on that chart that you just had, issuing these perpetual debt structures and just having the accumulated treasury to back it. And it's like this, Jesse Meyer had that great diagram where he shows like strategy pumping money from the fixed income market into teeny tiny little Bitcoin on the left. Really, it's like the Bitcoinization of the bond market, which is an incredible product. I had a big conversation recently with Preston Pish. So I think his podcast comes out soon. We were talking all about these ideas. And we said, like, you've got your strategies, you've got your meta planets. They're really trying to do something. They're going hard. They are going all in, and they are very, very committed. There's a handful of other treasury companies which are kind of on the periphery. They're kind of taking it seriously, like GameStop. Great example. GameStop, they bought some Bitcoin, but like that was it. They didn't really like go in. They didn't commit to it. And the market dumped their stock. You're either in it all the way or you're not in it. So some of these companies, it's rewarded very, very strongly. Some of them, it just really hasn't. We saw the other day that there was a company that announced an Ethereum treasury, and I saw a tweet today. They're down like 95% from when they issued that announcement. So get wrecked. So it's a really, really tough setup, but it is a Bitcoin-only story. I know there's a bunch of these companies trying to do it with crypto tokens. It's just not going to work out for them. It is a Bitcoin story, and the reason is going back to what we said before. It is pristine collateral. It is just the best asset. So as a result, why would you buy the second, third, fourth, 50th best token to stick it in a treasury? No one wants the 50th best token. They want Bitcoin. So I think it's a fascinating trend. I don't know how long it has because, like many people, I look at it cautiously and say this is starting to look a little bit like a bunch of Ponzi games. And my core thesis here, I don't think there's infinite demand for these companies. So at some point, we're going to hit a saturation where there's just no more demand for the next one. Now, this is being partially dealt with by there being like one in Japan, one in Korea, one in here. Like they're putting them all over the place. So there's like local markets. So you could argue that that's like a trapped capital idea, strategy being in the US. So yes, there's an element to that. But I also don't think that there's going to be too many like really big institutions buying the 50th Treasury company at a $100 million market cap. I think that the money is going to flow towards the big ones. There's going to be a handful that win. And I do think a lot of these companies, look, as with all business models, startups, companies, whatever, most fail. That's just a fact. So not every CEO and board of directors and shareholder base is going to be like Strategy or Metaplanet. Not every company is going to be able to deal with. There will be a period where Bitcoin doesn't go up only. It is going to go down at some point. We will have a bear. I don't know where, I don't know when, but we will have a bear. I still believe a lot of these companies will not have what it takes to make it from A to B. Strategy, whole different animal, because they've got the size, the scope, the product, the bond market, the whole lot. They're a different beast. Metaplanet, they've got the trapped capital in Japan. It's a very unique circumstance, very hard to replicate. The more of these that pop up, I think the less demand there is. And I think a lot of retail interest will go there, but retail also can't bring infinite money. At some point, they're going to exhaust themselves. So I think it's a temporary trend. I think it's a sight into what's coming, which is every company having a Bitcoin treasury. But I also think it's going to go through a boom and it'll go through a bust. So just be prepared for that.
Yeah, I mean, if Bitcoin is money and Bitcoin is successful, it's only logical that every company has some Bitcoin. Like that's just, and then at some point, it's nothing special. If you're Bitcoin treasury companies, it's kind of like, yeah, I'm a US dollar treasury company. like
totally.
Oh shit.
And how do value investors value them? Book value. That's MNAV, right? It's book value, just is the same term as MNAV, but for the fiat treasury. How much cash have you got on hand plus your enterprise value? That's your MNAV. So it based on fiat. So it's the exact same concept. And you're right. There's going to come a point in like a saturation point where MNAVs, in my view, will continue to compress towards 1. Doesn't mean they have to equal 1, but the gravity is to compress towards 1. And it's going to require these companies to actually come up with something that the market wants. So there is a limited set of these things that can do, like what does Saylor actually ship? Fixed income. His product is bonds that yield more than your average bond, which is backed by a sounder money than the fiat that we all use. So that's a product line. It makes sense, actually, when you really dive into it. That makes a hell of a lot of sense. A company whose job is just to buy Bitcoin, but they don't really have like what are they tapping into? Saylor is specifically getting money out of bondholders. That is his product. If you got a company who's just buying Bitcoin for the sake of buying Bitcoin, I don't think the market's going to give them a high premium over the long term. And the risk is a lot of people will see them spike up. They'll hear the latest treasury company. They'll buy it at a 10x premium. And then they'll just watch that money not go anywhere because the premium will compress. They'll buy Bitcoin, but the premium will come down. And they just may not get, if you're not there for the initial explosion, it may be a tough ride. So just be careful.
And I forgot to bring up a question. I think we already talked a little bit about that, how this cycle is not the same, but still the same as the last cycles. Is there some other aspects that we haven't mentioned to this thesis, the difference between the last cycles and this cycles and the similarities with this cycle and the last cycles?
Yeah, so there's a lot of similarities. Like one of the charts you can plot is like since the cycle high, and you kind of model out the index price of how each cycle's performed. We are like exactly where we've been in the last 2 cycles. So from the previous cycle all-time high all the way through the bear and up to where we currently are, it's like word for word, dot for dot, exactly the same as the last 2, which again is incredible considering the fact that we're 100 times bigger than 2017 and 10 times bigger than last cycle. So that alone is quite remarkable. But the way that the market is trading is very different. So the way I would frame it up is in 2017, I actually believe there's been 3 Bitcoin cycles, and there's got nothing to do with the halving. So the way I've been looking at cycles, the 2 delineation points is the 2017 top and when FTX blew up in 2022. Those 2 really are the major inflection points. So everything up until the 2017 top, you mentioned it earlier, suddenly people are talking about Bitcoin. Bitcoin became a household name. That was an pure retail-driven, very organic adoption. And that was a phase where Bitcoin came into the world. And people are responding to it. We don't really have trading view charts. It's very, very organic. People are just trading off gut instinct. And a lot of people bought and sold. we can actually see if we look at like the heat map of where all the coins were accumulated at different price levels, and you look at it as like a heat map, most people bought, it went up 40% and they sold. And then it went up another 40% and then they sold. And there was this like progressive, no one held on for very long. Everyone just kind of bought, sold, and cycled coins through that cycle. If you go to the 2018 to 22 cycle, that phase was, we kind of knew what Bitcoin was, but there was a lot of education to happen. Very few podcasts, they were starting to spring up. The education side started to get built. I know because I lived through this whole journey. Pete McCormack, he only started in 2017 and his podcast grew. And I, as a Bitcoiner, I grew alongside it. Listening to your Stefan Liveras and all these guys, like helping me get my head around this strange thing. And we had leverage. So not only is like they're the Bitcoiner education journey, but also we can see it in Bitcoin dominance. There was still a lot of people who didn't quite understand the difference between Bitcoin and crypto. And there was a lot of demand for crypto as better tech that was going to beat Bitcoin. And you can see it in just the way Bitcoin dominance traded. Now, after FTX, I think a lot of people didn't quite understand, and probably still don't, how utterly destructive FTX was. For retail investment in crypto, I think it nuked it. And I don't know if that's ever going to recover, honestly, because it was a real pulling the veil across the eyes where everyone just goes, oh, wow, maybe there is nothing there. It's all fraud. It's all Ponzi. It's all Fugazi. Now, Bitcoin came out of that much stronger than people expected. The narrative when FTX blew up is that Bitcoin was dead for a decade. And yet here we are trading at 106K a couple of years later, still one of the best performing assets every year that it's around, like kicking ass, and altcoins are getting smashed by gold. So I think there's been this divergence that's happened. So I really think that was an inflection point. And the way a lot of my metrics trade, and this can be just like the ratio between price and the 200-day moving average, the ratio between price and cost bases, there's all sorts of metrics we can look at. It's trading very similar to 2016-17, which is very spot driven, very organic, very real. Like it is a very real cycle. This is not some bullshit like it's just printed money or it's just, what do people keep saying? It's not a ZERP phenomenon. It's not just based on zero interest rates. There is genuine and very, very serious demand for Bitcoin. But at the same time, it's trading in a lot more of like a cyclical pattern. In 2017, very organic, very like chaotic, sharp rallies, sharp sell-offs. If you went away for a long weekend, you'd miss a whole 40% correction in 2017. Now, it goes down 30%, but it takes 8 months, 6 months to play out. So it's like this slow, grinding process, but it builds a lot of support. So it's got definitely a duration component that's longer. It oscillates around a lot of these means rather than like retesting them. So it doesn't bounce off the mean. It kind of oscillates around it. It's a lot slower, but it's a lot more structured. So there's a lot of things that are similar. I can draw parallels to both cycles, but at the same time, it has its own signature. And I think viewing it as its own signature is important. A lot of people are going to look at previous metrics and say, oh, why didn't it hit this threshold? It's like, because it's not, that threshold doesn't matter anymore. Bitcoin's in its own world, and we have to look at where it is today relative to its recent history. Its recent history is much more informative than past cycles. So for me as an analyst, this is fascinating because we're kind of in a new era, and we have to absorb all this information differently and kind of construct the cycle as we go, because we actually don't know what the top's going to look like. We don't know what the bottom is going to look like. It's going to have different properties to previous cycles, even if it rhymes, right? It may rhyme, but it's definitely not going to repeat.
Another question that I got too many times, and I always asked, said the thing before we recorded. I was in Prague and I got asked the question probably like 5-6 times, like, oh, where we will be at the end of the year. And I always said like, oh, between 50 and 500K, so somewhere along those lines. And there's a slow chance we will be below that and beyond that. But what do you kind of expect for the second half of 2025? And if you look at the past cycles, this has been a kind of the crazy last inning of Bitcoin. 2017, we mentioned already, it was crazy. I think it was like 300% in the second half. 2021, it was kind of different. It was kind of cut short with the mining thing. I mean, obviously it's very hard, but like, what do you kind of expect for like the second half of 2025?
Yeah, so my current framework, there's a couple of levels I'll talk through. The first one is the 2024 I call it chop solidation, that period where we just chopped sideways for 8 months. Now, that zone, let's call it the top, is about 70K, 73K, something like that. That zone, if we go into a bear market right now and we've just peaked and it's all over, that's where I believe the bear market bottom will form. I do not believe we belong down there. I think that is deep value. So it is a very, very strong zone of support. I would be amazed if we ever see price go below there. Can it happen? Of course, but I would be quite surprised. It is a low probability event in my view. One very simple way to think about this, in 2021, we rallied up to 64K. That's a $1.2 trillion market cap. And then we got smacked down to 29K with the mining ban. Then we went back and we tried it again. And then we got smacked all the way down at 15K. So every time we went to $1 trillion, the market said no. Then we went to $1 trillion post the ETFs, and we chopped around sideways for 8 months above 1.2 trillion. And every time we sold off below to that like $1 trillion market cap, the market came in and bid it. We sold off down to 53K. The German government sold 53,000 Bitcoin and the market rallied through it. I believe we are well and truly $1 trillion. We proved it. We are now $1 trillion asset. The next question is how many trillions? So at like a base floor level, we belong above 70K. So the next level is about 90, 95, let's just call it 95 to 100, that zone, which frankly is not too far below us. That is an area of immediate support, very, very strong support. I don't believe we should go below 90K. If we do go below 90K, my gut feel is we probably have something pretty nasty happening. And I would say that it's going to be macro driven. There'll be something happening in the world that's probably not Bitcoin related. There'll be a liquidity squeeze. It'll be something like that. In order for us to go below there, it's not a good sign, honestly. It probably means we are going back down to 70K would be my base case. I think that we will hold that level of support. So in the very immediate term, and I looked at the options market before I jumped on this call, it's also saying out to the end of the year, 90 to 100K is where like the 25% probability is. So 75% of options traders, or the way it's priced, believes that we belong above 90K by the end of the year. And that's where my case is as well. So that's kind of our like immediate floor level. Now we start getting to the fun stuff of how high can we go. My base case is that we want to go higher. I think there's enough demand to come in. There's a few things that I'm a bit bearish about that concern me, like the fact that there's no one transacting on chain. That's a bit of a concern, but that's a kind of a separate issue. My base case, I think we go higher. 120 to 125, I have like 75% odds on. I think it's pretty likely. However, once we get to 120 to 125, that zone, this is where I expect people will start selling again. I've got a couple of models that basically shows like when the average long-term holder gets into quite a bit of profit. Every time we've hit this level of like unrealized paper gain, they've always started selling, like literally every single time. And it's always caused either a major top, like a local, global, or a global cyclical peak. So 120 is where I think we probably get to. I think we get past it. But the higher above that level we go, the more sell side's going to come in, the more euphoria is going to come in. So then we enter this very interesting game between massive demand, because people are like, oh, here we go, going to 200. Let's go, baby. People are going to step in and start buying. Margin's going to increase. The narrative's going to get bulletproof, but the selling is going to ramp up, is my base case. So 120, 125, selling starts. I think we clear it. We probably get there. I think we get past it. Once we get up to 150, 160, 170, just about every model I have, I think the top I have is 176 at the moment. Again, that doesn't mean that we're going to get there. It just means that if we get to 176, all the metrics that I have will be in overheated condition. Now, could they be wrong? Absolutely. But every single time we've hit those levels in every previous cycle, there's been too much sell side in the markets. It's had enough. If we do go above that, we're talking about sub 4-5% chance that it stays there. So yes, it can get explosive to the upside, but above 170, it's really getting steamy in the room. The absolute pico level that I've got is 230K. And that's derived from the Mayer multiple. Just looking at where the 200-day moving average trades versus the versus price. As it stands today, that would be 2.4 times above the 200-day. In every previous cycle, we have touched it, and that was it, completely over. So Could we get to 230? It's possible. Are we going to stay there? I'm going to say with pretty high conviction, probably not. We will pass it eventually, but I don't think we're going to get through it on the first go.
It's interesting when we think about those boundaries. I think if the first narrow that you kind of mentioned was a 90 to 120K, and then the outer pound of like 70K down and 230K up, which is interesting. I'm thinking like, if nothing crazy, and you mentioned it, if nothing crazy happens, we probably are in this like inner bound things. And the crazy things that can happen is like to the downside, I don't know, like something major war thing where everyone is kind of like, totally, yeah, exactly that. And to the upside, it's funny, like what can actually happen when you think about what can happen that would push Bitcoin beyond 250K in 2025. Like what needs to happen, like what needs to come out, because it's already such a big shift, such a big boat. What needs to happen that steers it completely in another way? Like would Apple converting 5% of their balance sheet into Bitcoin make that? Maybe. Amazon accepting it globally as a medium of exchange. I don't know. Like things like
200K,
that.
200K, Bitcoin is $1 trillion bigger than the biggest company in the world because they're like 3 trillion, right? So 200K, Bitcoin is number 2. Gold is the only thing above it. And I also balance this, right? So like Check the Analyst is going, that's going to take a lot of work. And I use Check the Analyst, who's like very objective and trying to just call the shots how they are. Check the Hodler is then, he's the one that Check the Analyst is trying to keep at bay because Check the Hodler is bullish all the time. So Check the Hodler goes, oh, you're telling me we're number 2. Let's go number 1. Let's go. Like if we're already 10% of gold's market cap, once we get to 20%, what's 20 and 25? And once we get to 25, let's try 50. And then like, once you're at 50% of gold, like, let's go, right? We're going all the way. So I'm trying to balance these things because like the bigger Bitcoin gets, the harder it is to ignore. And the bigger it gets, the more big money can invest in it because you've got billions of dollars of trade volume going on all the time. The bigger it gets, the more money can come into it. But it's just not going to be a straight shot. So I think that's the way to think about it. We're going to get there. We're going to get to gold's market cap. It's just going to take a long time, but there will be phases, right? There'll be phases where it just rips. And if you've been in Bitcoin for a long time, actually, I ran a study some time back. This is probably a useful just framework to think about things. I looked at all of the last cycles, 2017, 2021, and I ran it for this cycle some time back, but I removed from that cycle the 10 best days and the 10 worst days. And the idea is, let's imagine you're a god tier trader and you sell the day before the big sell-offs and then you get back in, which no one can do, but it's a theoretical model. If you remove the 10 best days, so you miss because you're trying to trade the cycle or you're trying to get in and out, if you miss the 10 best days, you are flat to down. You actually don't make any money on the cycle. You're actually underwater from where you started most of the time, which is a crazy statistic. You just have to be there for those 10 best days. And they're random. They happen all over the place. Sometimes they're at the start of the cycle. Sometimes they're at the end. They're all over the place. But if you miss those 10 best days, you lose everything. Bitcoin's not up versus that versus your starting point. If you miss the 10 worst days, which what a lot of people do, I'll sell here and buy back later. If you're that god tier trader and you just get out before those 10 best days, your return goes from like, you might be up 600% by just holding DCA spot. You might get like 800%. So yes, you perform better, but like the risk of getting that extra 2x, right, from going to 8x from 6x to 8x, you risk getting 0. So that's like, just don't trade the cycle. Just be there for those days. Most of the time, Bitcoin goes sideways and nowhere. Literally most of the time. And then sometimes it just rips. It just giga rips. And you just have to be there for it. If you're not there for it because you're trying to trade in and out, it just doesn't end well.
I love the message. I have one more question before we end routine, because you said you hold physical gold, which is you hold gold as cash. Where I'm like, how do you do that? Do you have like physical gold that you buy and sell, or do you have some product that you do it with, like an gold IOU? And why gold and not like an ETF or anything else? Like why like this gold and Bitcoin strategy? I love it, by the way.
Yeah. No, I just use a physical ETF. We've got a good one here, which for whatever it's worth, it's backed by the Perth Mint, which is backed by the government. So at the very least, And I've thought about this, right? Because you could take physical gold and, self-custody and all the rest of it, but then it's a pain in the ass, right? Then you got gold in your house, the whole thing. It's just painful. I can get instant liquidity if I need to sell it, right? At the end of the day, why do I own gold? Specifically to sell it. Why do I own Bitcoin? To not sell it, to hold it forever. So the gold is there to be sold. So if I make it more difficult for myself to sell, and I game theory this out, in the event where the government says, thank you for your service, gold's trading at 5,000 an ounce in Aussie dollars, here's your $5,000. Oh, by the way, we're re-rating the Aussie dollar and gold's now $20,000. Thank you for your service. In that instance, my Bitcoin rips to the moon. So I'm kind of hedged in that scenario. And I get cashed out, fine, whatever. So no, the reason I hold gold is for a very specific purpose. And I've said this a bunch of times. As you probably know, the Australian housing market is a Ponzi scheme and it's completely out of control. I don't know when the opportunity is going to strike that I might want to step into the housing market. I know it's not probably right now, but there will probably come a time when I don't even want to buy the house for an investment. I want to buy it why most people do, which is to live in, to have your family in your home. I don't know when that time is going to be. So the gold is there because it's the same trade as Bitcoin. Fiat's being debased forever, but I struggle to sell my Bitcoin. I'm going to have no trouble selling my gold. So I know gold's not going to outperform Bitcoin. I don't need it to. What I need it to do is to not be down significantly from what I invested. I literally just need to preserve my purchasing power. And the way that I think about them, gold preserves what I have, Bitcoin grows it. That's how I think about it. So the money that I just literally want to stay at the same purchasing power, I put into gold. The money that I want to grow in purchasing power, I put into Bitcoin. And I just have that very simple two-way framework. So when the time comes, I need to get some cash to cover an expensive bill or to get a deposit for a house. That is the purpose of the gold. It's going to be there. I know it's going to be there. It's going to preserve my current savings power. I don't need it to grow. I just literally need it to be there when I need it. That's its job.
Do you have taxes on gold in Australia?
We do, yes. We do have taxes, although we don't have like sales tax. So if you're buying physical gold, you don't pay the 10% VAT. So it's one of the only assets I think it is the only asset, physical gold, that doesn't have the sales tax.
Because I think in Austria, and I haven't looked it up since a while, there's actually on physical gold no taxes.
Yes, there's a few countries where that's the case.
Which is amazing, which gives me the hope that at some point maybe they look at Bitcoin as physical gold, and they also, if Bitcoin is in self-custody, there's no taxes, and if Bitcoin is on exchange, you have to pay taxes. I think I would love personally that rule. It would incentivize people to get into self-custody. If Bitcoin in self-custody is not taxed and Bitcoin on exchange is taxed with 50%, I'm okay with that.
Me too.
But yeah, that's just another small thing. We have one question to ask each and every one of my returning guests, which you are. The question is, what can we learn what have you learned since you have last been on the podcast outside of Bitcoin?
Ooh, outside of Bitcoin. I think that you have to look after yourself. So I think this is a lesson that you constantly learn, relearn, forget, and relearn. You go through these periods in life where sometimes you like click and you recognize I've been working too hard, or I've been focusing too much on this, or I think just being a bit more cognizant of where you're at and almost doing more self check-ins. So, for me, we've been building up the business. I pivoted out of engineering a couple of years back. Now we're starting, and you get caught up with everything. There's a whole lot of things that happen in life, and it's very easy to just commit and get it done. And every so often, you've got to take stock. And I think it's a lesson that you constantly learn, and then you forget it because you get caught up in stuff. So almost making it a part of a routine to make sure that you're checking yourself. You can have having friends and all that. They're fantastic to do that as well. But you've got to make sure you look after yourself at the same time, and just do a bit of an audit. Work out what you're doing, what's working, what isn't. And I think it's okay to cast away stuff that's not working for you. Being able to let go of routines or systems or things or relationships, whatever it is that's not adding value, it's okay sometimes to actually just take stock, and sometimes you got to cull stuff and bring it back to your what really drives you forward and gives you that passion.
I love that. It's actually, I guess that's one thing I'm struggling the most with. like checking in and then taking those breaks. But I've been better with that in the new year because I have now people that help me in the post production. So I'm not swimming in the water alone anymore.
Yep, that's it.
Really cool. We have an end routine, as you know, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, in order to most likely to least likely, what are the top 3 things that would make Bitcoin fail?
Most likely to least likely. These are good ones. So I think most likely is, in my view, actually how do I frame this up? I think there's a risk that we prematurely ossify. And this is not to say that we should need to change Bitcoin, but I think it needs to be a recognition that Bitcoin does need to change, right? There are going to be things, risks, and dynamics. Quantum's a great example. We are at some point going to have to work out how we solve that problem, how we're going to go about it, how do we actually deal with upgrades to the system. So recognizing that Bitcoin is a complete project at an ideological level, making sure we preserve that, but recognizing that it is still software and it does still need to be maintained and looked after. And that is a process. And there are very, very few people in the world who actually have the skills to look after Bitcoin at a code level. Highly, highly sophisticated technology. So I think we have to be very careful as a community to not, certainly the white blood cells of Bitcoin need to work, and they certainly do, but we need to make sure we don't attack and we can actually distinguish real attacks from, narratives. And I think that's a very important one. I guess quantum's kind of it's a level. I don't think it's look, I think Bitcoin will solve for that problem. So I think it is a risk. It's a tricky one because quantum's, I've had plenty of conversations with people trying to get my own head around the quantum threat. So maybe I'll put this as third. I'm trying to work out what my second one is. But the idea of quantum is there are probably only one industry in the world that has more grifters than crypto, and that is the quantum world. So the story of like what the risk actually is and how close it is often disproportionate. Like it's out of proportion of where it actually is. But we also know if we run the human experiment long enough, we will eventually hit limits of cryptography, and we'll eventually crack it with a big enough computer, and all these things. So certainly not getting too scared about it in the short term, but also being aware that we are going to have to deal with that problem eventually. Okay, so I'm trying to think of what the second one is. The first one is definitely like not throwing the baby out with the bathwater, making sure we look after Bitcoin and understand that ossification is a risk itself. Look, honestly, probably a risk is just simply the willingness of people to give up self-custody. As products develop, as custody solutions, banks get involved, it's going to be very easy for people to give up custody. So, and by the way, I've also, unfortunately, I think that the average person is going to prefer custodied solutions for a variety of reasons, security, and just they don't want the risk, and you don't have keys in your own house. It really comes down to Bitcoin is making sure that we continue to express to people why it is important and helping people understand why it is critical to make sure you have your own keys. Bitcoin works as freedom money if people anywhere in the world can take their own custody and use it. So there is a risk of over-centralization, whether via Treasury companies, whether via ETFs, exchanges. I don't think it's fatal, but I think it can tarnish Bitcoin's ability to be that freedom money. So I would probably just bolt onto that, the privacy side. The more coins are in custody, the more the privacy side is, and you can kind of see how all these are connected. The technology has to evolve to make sure that the privacy is maintained. We need to be able to deal with the quantum threat. Like all these things are very much, if we make Bitcoin unable to be used as a self-custody instrument, people are going to prefer the convenience of custody. So the upgrades, like covenants, for example, having the ability to have all these tools and wallets and things that allow it to be easy and give people the functionality they want, helps keep the coins off exchanges, helps keep the coins out of ETFs, helps us with the privacy. All of these things are very much connected. So yeah, it's a bit of a roundabout way, but I think they're the kind of three that come to mind.
I love them. And they're more realistic than my favorite one, aliens coming to Earth and forcing their money on our systems.
I haven't heard that one, but if you ask Matthew Pines, it could be already happening.
No, like I have that theory of like, if aliens come to us, they probably have some system of exchanging values. If they come to us before we come to them, they are more advanced than us, and they might be able to force their money on our systems, which would make Bitcoin and everything kind of worth less that we're doing. And we're kind of slaves. Like, I don't know if you can make the comparison with Europeans and Africans with the gold thing, where the Europeans slave to Africans. Exactly. So maybe there's some same going on with like other planets, but that's just like the least likely thing. And if at that point nothing else matters anyways, and I'm just waiting for someone to bring it up. I like that example just because it's fun.
Yeah, it is.
Thank you so much, James, for being on and being such a great guest. Before I let you go, where can people find you and your newsletter?
Thank you, mate. No, it's you'll find us over at checkonchain.com. We've got two main products. There's the newsletter, but also the charting platform. So all of our charts are free. You can get pretty much any Bitcoin chart you could possibly want. So yeah, you'll find us at checkonchain.com.
Awesome. Thank you so much for being on, for taking the time. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.